Welcome to the Startup of the Year podcast, where each episode we showcase exciting new companies from around the world. This podcast is produced by Established, creators of the Startup of the Year program. Established is focused on helping organizations with their innovation, startup, and communication strategies.
Hello, everybody, and welcome back to the Startup of the Year podcast. I'm Frank Gruber, the co-founder and co-CEO of Established, and the co-founder of Established Ventures, the team behind the Startup of the Year community and this very podcast. Thanks so much for joining us today, and I'm super excited to have you here along with our amazing guest. We've got Marlon Nichols today. He's going to be talking with Jen Consalvo, our co-founder and co-CEO of Established. They're going to be talking about venture and everything he's been up to over at Mac Venture Capital, which is based out of LA, if you're not familiar. They've invested in a number of companies like Gimlet Media, MongoDB, and a number of others, including our 2020 Startup of the Year solo fund. So we're excited to be investors alongside him in that actual funding. And for those unfamiliar with Marlon, he's the former Kauffman Fellow. He's a former investment director at Intel Capital. He has an extensive background in technology, private equity, media, and entertainment. He's on the board of a number of companies, including the Kauffman Fellows program, which educates new fund managers and how to be better VCs. And then he's also won a ton of awards. I can't even list them all. There's a long list here. He also teaches entrepreneurship and venture capital at Cornell University and was most recently featured in a full spread article on the front page of the business section in the LA Times. If you still get the paper, it was quite an article, and probably could check it out online as well. So pretty cool stuff going on here with Marlon Nichols, and excited to jump into that interview shortly. Before we do, though, I want to give some kind of housekeeping notes for those of you following along the Startup of the Year community and our awards and program. We've got our 2021 Startup of the Year application open. If you're a startup and you've raised less than $5 million to date and have a functional prototype, or just beyond something, but obviously beyond an idea, you got to have something you can see or in that trajectory, then you might want to apply immediately. We're looking for the most interesting companies from all around the country to represent in our annual awards, as well as be crowned potentially Startup of the Year. So to apply, just go to soty.link/apply. Again, it's soty.link/apply. The top 100 startups from our community this year will become a part of this summit's happening in the later in the year, and it also will be opportunities to connect, showcase, and potentially get investment from investors that will be involved. We're excited about the program, and we've been doing it now for 9 years, if you can imagine. So great stuff. We've got a great group of alumni as well, and we'll all be getting together here soon. So definitely want to do that. Go to soty.link/apply. All right, we also have some other deadlines coming up for other programs we work with. The DoD SBIR STTR 2021.2 deadline is coming up in June here, June 17th. The Greater Colorado Pitch Series application, which is coming up as well, they've got a deadline on June 18th. And the SBA Growth Accelerator and the SBIR Catalyst Prizes have a deadline of July 2nd. So we're going to link all that up in the show notes so I don't have to rattle off a bunch of links. Definitely check that out. If any of those sound interesting, it's all things that'll help, they're all startup opportunities. If you've got a company and you're looking for additional opportunities to get exposure, potentially get capital, or additional infusions, or just get notoriety, check these out. You'll definitely want to. All right, next I wanted to follow up with something that's been happening in our community. We love finding the best tools for our community, and we just found another one. Okay, so did you know that thousands of tech founders across the country are getting billions of dollars back from Uncle Sam every year for working on their startups? Yes, you heard that right. There are thousands of tech founders across the country getting billions of dollars back from Uncle Sam. The research and development tax credit is available for any tech startup that is developing products or technology, and you don't have to be profitable yet to qualify. So our friends over at TaxTaker are making it easy for founders to get that savings they're due by just leveraging their technology and their team of experts. It's free to sign up, and all you have to do is go to taxtaker.com/SOTY. That's right, taxtaker.com/SOTY, and you'll be able to check out and file and see if you can get some money back. Otherwise, you're just literally leaving money on the table. They're over there to help you, taxtaker.com/SOTY. I mean, it's amazing. I didn't even know that existed. So I'm learning things here on the podcast today. Now that we're here, I've got one more partner update. May have mentioned it before. You may have heard it before. I'm a big fan of the company Finmark that came through our 2020 program. They are a financial planning software for startups with revenue forecasting, cash projections, and runway. Super critical for anybody that's starting up. Those are, there's a few products out there that do this, one of which is spreadsheets, and you can definitely make mistakes doing things in spreadsheets. So I would check out Finmark. You go to est.us/Finmark, and you'll get a 30-day free trial on us. So get your financial planning in order and modeling in order, and start today, because you don't want to make a mistake in a spreadsheet that costs you millions of dollars. All right, now let's listen in to our AMA with Marlon Nichols from Mac Venture Capital.
Let's get started by hearing a little bit about your journey. First of all, where you're from, how you wound up in Southern California, and a bit along the way about how you got into VC.
Sure. So I was born out of the country, actually. I'm an immigrant. So I was born in Jamaica, West Indies. My family moved to the US when I was about 7, to New York. And so I grew up partially in New York and partially in Jamaica. I would spend basically every summer on the island with my grandmother until I was about 15 and got, real serious into sports. And then the summers were filled with camps and things like that. I studied MIS at Northeastern University, and that was kind of where I first got into tech and kind of the startup world. Right after graduating, I joined a seed stage enterprise software company called Frictionless Commerce, and within a year was asked to move to the UK to basically build and grow that company to serve the UK and Europe. So I spent 3 years doing that. Ultimately, that company was acquired by SAP, and I decided that I didn't want to be an operator, nor did I want to work at a really large company. So I left and went back to the US, moved to Harlem, New York, and got into strategy and technology consulting. And initially, I was working with the Blackstone Group in kind of post M&A integration work, and then that turned into a pure play strategy consulting role focused on media and entertainment. So working with companies like Warner Music, McGraw-Hill, and the gig was basically to help them to understand how to embrace and make the best use of the internet, which was becoming ubiquitous. Then I went back to business school. I decided that consulting was different than operating, but maybe too different, and I wanted something in the middle, which for me was venture capital. So I went back to business school at Cornell, and I had the privilege of leading the school's pre-seed venture fund for the 2 years that I was there as its CEO. After graduating, joined Intel Capital, which at the time was the largest and most active venture firm in the world. We deployed up to $500 million per year into Series A, Series B companies. Following that, I started my first fund, which is called Cross Culture. That's about a 5-year-old vehicle now, very, very well-performing vehicle. And now we're on to our second fund. We did a slight rebrand, and it's called Mac Venture Capital. And we're a seed stage venture fund with presence in LA and the Bay Area.
So when you say seed stage, can you tell folks typically what size checks you're writing at what point?
Yeah, so seed for us means that you have a viable product, you've built it, and you're starting to get some feedback from the marketplace. So you're probably not, in most cases, you're not all the way live with your launch, but maybe you're in beta, or maybe you have some beta customers if you're focused on the enterprise side. And there's some data that we can look at to start to see trend lines and things like that. So that's kind of how we define seed. And there's a range within there, and different levers. You can pull different levers to get to a yes, but generally that's where we are. And our initial check size is up to 1.5 million, and we're targeting it's basically 10% ownership at our first investment.
All right. So our first question from the audience is, what would be your advice to a fintech business that is trying to secure a seed investment from VC? We're at the MVP stage.
You're at the MVP stage. So that these questions are always hard to answer, right? Because I don't know enough about your business to truly be helpful. I could tell you for us, what we look for is, who's using the product, and I don't even know what kind of fintech product it is,
Right.
but like who's using it, how often are they using it? If you are generating revenue already, what does that look like? How's it growing month over month? Typically, we like to see at least a quarter's worth of data, maybe 2 quarters worth, and you want to see things going up and to the right in a consistent fashion. And that thing that's going up and to the right is, the thing that's most important to the success of your business, or measuring the success of your business. So it could be revenue, it could be member acquisition, it could be dollars spent on the platform, it could be a number of things.
Right. And that's a really important point too, especially if you're at the MVP stage, right? It's understanding the metrics that really drive your business, because it's really easy to get caught up sometimes, right, with the wrong metrics if they're numbers that make you feel good.
Yeah. It's definitely what is important to the success of this business. How am I measuring that? And can I show, a growing trend as it relates to that metric?
Okay, so someone just asked us, Marissa, what about considering seed stage enterprise SaaS companies pre-revenue?
Yeah, we don't necessarily need it to be generating revenue. If it's enterprise SaaS, what we're looking for there is, who's buying into it, right? So what does your customer wait list look like? Do you have pilots pilot customers that are working with you? What are they saying about your product and likelihood of becoming a paid customer? There are a number of things. One of the more successful companies in our current portfolio is a company named Pipe, which is all enterprise SaaS, and we invested pre-launch. Actually, they had the product. They had a massive wait list and a value proposition that just resonates with SaaS-based companies. And so, we took that, spoke to some of their customers, and we had a pre-existing relationship with the founders, and made the bet to go forward. And that's panning out really well for us.
That's interesting. So when it comes to investing in a company that's pre-launch, is it usually because there's something about the founders, you have a pre-existing relationship, or they've got the experience and know-how, or is it just depends on the unique situation? Because that's something we often advise people, just get something out there and launch it. You're probably not going to get an investment before you have something to show for yourself.
Yeah, it's kind of all of the above, right? And so in this case, it was like all the stars and moon, the planets, everything aligned, right? I've worked with the founders before in another company, which they sold, and we maintained a relationship, so I knew them well. The problem that they were solving was a really big one that resonated in a significant way with their target customer base. And then they had a massive wait list of folks that were just clamoring to use the product, right? And were willing to speak to us about why they found it so compelling. And then the product itself was really slick. It was built. It was pretty well baked by the time that we invested. They just needed to turn it on.
Right. So I very often see people send me decks of an idea, right? Like, this is what I want to do. I'm a first-time entrepreneur. It's, this concept's amazing. Should I start sending over to investors? What do you tell folks when you hear that?
So that's usually not a seed stage investor, right? Just going back to the definition that I shared earlier. If you have an idea, I would say build something, right? Get something going, and then raise friends and family angel investor round, where their requirements are going to be less, right? To give you some capital so that you can get started. But even then, I would be, if I were in that entrepreneur's shoes, I'd be reluctant to start to ask for capital before I actually have started to put something together. Because everyone has ideas, right? It's about how you execute.
Mm-hmm. So another question that just came in, is it true that it's best to have a co-founder to raise capital?
Not necessarily. You should have by the time you get to our stage, you should have a team. But I don't know that having a co-founder is necessary, right? It's about who is building this thing. Why are they uniquely qualified to go after this opportunity? And are they able to convince other really talented people to come along on this journey? That's kind of what we're looking for in the team.
Mm-hmm. Another question that's just come in. Does a term sheet come before the diligence?
Usually no. You're before you put down a term sheet, which what is a term sheet, right? It is basically the blueprint of what this deal might look like, right? And so before we can, first of all, we have to decide, like, do we want to do this deal? And you can't do that without doing some level of diligence. Now, after the term sheet, there's another type of diligence, legal diligence that has to occur. Maybe IP diligence, things like that. That are more technical and legal in nature. That would happen. But yeah, understanding the market, understanding the competitive landscape, speaking to customers. You have to do all that stuff and make sure that you have real conviction for the opportunity before you put down a term sheet. Because while it's not binding, it's essentially a signal that if legal diligence checks out, we're moving forward on these terms.
Right. And we had an AMA earlier with Mark Nagar from Greater Colorado Venture Fund. And I know they were having a conversation about, it's also important to be doing your homework too with the investor, right? Like this is a relationship. This is your investors are now sort of an extension of your team, and you need to you need to like your investors, you need to believe in them, and it's not just a one-way street.
Yeah, absolutely. It's about really building a relationship, right? I'm looking at an entrepreneur and their team to figure out, one, do I believe in the market opportunity in front of them? Do I believe in the viability of their product long term? And do I believe that they are the team that can pull this off? And then, kind of fourth, and it's not in that order of importance, but is this a group that I will enjoy spending time with over the next 5 to 10 years? Can we work well together? Do I trust them?
Yep. All important things. Another question coming in. What should startups think about before contacting a VC? What kind of question impresses you?
No, I wouldn't say a question per se, or a specific question per se would impress me. I like authenticity. So when we connect, just be transparent, right? What the things that inspire me are, either ideas that are kind of market creators, or or businesses that are solving for challenges that haven't been addressed or haven't been addressed adequately over the years, right? Where you have a real opportunity to become a category leader. But yeah, no, I'm not looking for you to ask me, an amazing question and that's going to seal the deal. It's more about I want to understand your business, what it's about, and who you are. And and to make a determination as to whether this opportunity is exciting enough for me to want to spend a significant amount of time on it. And do I like you as a person and as a founder enough where I want to spend time with you?
Yeah. All right, boy, the questions are rolling in. Question from Ashley. If I have received seed money in exchange for a portion of my company, will that deter VCs from investing later? What is the max I should give for the initial fundraising, like friends and family round, so I don't deter future investors?
Hard one to answer. I mean, after the seed stage, you want to have, in terms of the founders, you want to have anywhere between, let's say, ideally 45 to 50% of your company that you'll still own, and that's after the seed. And usually at seed, you're parting ways with about 20% ownership of the company. So I'd look at it that way. Series A, you're going to part with another 30% of your company, and then I think from there on, assuming valuations go up, it's less and less. It starts to get less. But by the time you have a liquidity event, if as a founder you have or founding team, you have about 10% of the company at that point, and you've done your job. 10 to 15%, you've done.
So another question, I want to make sure I understand this question. How do you look for a new startup without traction? So maybe they mean, how do you look at a startup that might not have traction yet?
Yeah, so I mean, those are more difficult for us, right? We like to have some data that we can point to that confirms our opinion of the opportunity. But there are always exceptions, and so one idea is that if you're building for a challenge or a problem that we're very, very familiar with and see as something that is needed in the world and can become a new category that's lasting. Something like that could be interesting, but you'd still have to have a product at that point, and we'd have to really, really believe in the opportunity and in this thing that you've started to build. But that's rare for us to have no traction. Like, no revenue is one thing, but no traction is a little bit different.
All right. So how do you research? This is basically advice for startups on how do you research and target a VC that has passion, skills, focus for either your target industry or type of software. So like medtech SaaS. So basically, how do you do your research, your homework, and find the right VCs that would be interested in your business?
I mean, just like you'd search for anything else, right? Do a Google search. You just put in my name, you'll see things that I've talked about, things that I've written, etc. I would visit their website and see the types of companies that they've invested in. Maybe we have categories that we slot our portfolio companies into. That's another way to do it. But yeah, I think, and then we publish reports, these state of technology and culture reports that capture a lot of our thinking in terms of what we're looking for today.
It's really interesting because I've done that not only for our past company, but in working with a lot of startups where we were helping them raise capital. And there is so much out there. Right? Just an important point, I think, to reiterate for startups is do your homework. VCs have websites. You can look at their portfolios. You can look at articles written about them. There's like a gazillion lists now of like, oh, the top VCs in X, Y, and Z or seed stage investors. It's not just about what they're interested in, but the level, right? Because you're not going after an institutional, a VC that invests at the C stage if you're at a seed round. You know what I mean? So startups, it's really, really important to do that homework, find the right type of investors for your stage and the type of company that you have. So another question coming in from Marissa. Crunchbase Pro, let's see. Is that a question? Crunchbase Pro is great to see which investors invest in what and finding out who funded companies in your space. Yes, so that's a tip. Crunchbase Pro, you can look at all kinds of sites out there. Even I think if you look at AngelList and others, start to get then.
There's a lot of them. The only challenge with that sometimes is like we're not always up to date. our record is not always up to date on those platforms, right? Because maybe we didn't send in like this quarter's deals or whatever. So they're good, and I definitely encourage founders to visit those. But I think you got to just kind of do general wider research as well.
I love this question. Have you ever wanted to invest in a company and your partners did not? Who decides to move forward with an investment?
Yeah, that's happened. We all have different perspectives and things that we like and don't like. Our process is a little bit different, where we have maybe a little bit more autonomy than some folks. We all participate in the diligence process in some way, and are kept up to speed in terms of what's happening with the company, what's the opportunity here, how big is it, all the questions you need to answer about a company, and then we get to the end of the process and we have a conversation, and at the end of the day, the lead investor on our team, we're going to give deference to their decision, having heard everyone's opinion, which is kind of a lot of pressure on that, and accountability on that person, right? Because if everyone is beating the table and saying we should not do this, and you do it anyway, well, you better be right. So that it forces us to be more diligent in our decision making process, but also affords us a level of autonomy that we all seek as as seasoned investors.
Right. And just a few minutes remaining, but I know we've got some more questions, so we're going to try to get them in. This is an important one. Does it matter if the startup is an LLC versus a C Corp when seeking a seed or pre-seed round?
Yeah, so venture cannot invest in limited liability organizations. It has to be a corporation.
Yeah, and I can chime in on that. There can be exceptions where you can get investment as an LLC. It's complicated. Most VCs will run, most investors will run from it. So if you're serious, if you see yourself as a company where you're going to raise money, you may seriously want to consider, if you're currently an LLC, changing it before you go down that path.
Yeah, I mean, there are things like setting up blocker organizations and stuff like that. But yes, it is complicated. And if you're planning to take on capital, you should just become a corporation.
Great. All right. Advice on how to make the good pitch to investors. What are the top 3 things that they're looking for while pitching? 5 minutes versus 10 minutes pitching?
So I mean, that's hard, right? So when I schedule meetings with founders, they're 30 minutes to 45 minutes. And basically we're having a conversation about the business. You're going to have your talking points, you're going to have your deck, and you're going to talk to your deck, but we're going to ask questions throughout, and we're going to make it super interactive. So there isn't, I can't say have your pitch down to 5 minutes or 10 minutes or whatever. It's going to depend on the scenario. The things that are important though, really you want to make sure that that investor understands that this is a venture scale business, right? So what is the market opportunity that you're looking at? How is what you're building novel or different from whatever else is in the market? Basically, how will you win and how will you protect your position in this space? And then why are you uniquely qualified? Like, why are you and your team the team to back in the building of this company? Those are the things that I'm typically focused on. And obviously, you have competitive landscape and stuff like that thrown in into those first 2 buckets essentially. But those are the three things that I really want to understand. And then, how do you scale this thing, right? What's your plan to go to market and build a really big business?
And another question, what does Mac Venture Capital provide companies besides capital? How are you connecting your networks with the founding teams?
Yeah, so this is where we differentiate a lot as a seed fund. So first of all, we believe very heavily that how you introduce yourself to the world, how you tell your story, has an outsized impact on how quickly you can scale and how large of an organization you ultimately become. And so because of the marketing and kind of talent management backgrounds that we have within our partnership, we are uniquely qualified to help companies formulate that story and get out the gates fast. That's one thing. Also, given our backgrounds, and you kind of heard my background earlier, but enterprise software, government. One of my partners was a former mayor of Washington, D.C. One of my partners was a Hollywood super agent. My former co-founder was an exceptional music manager and angel investor. So those, and operator. And so those, career experiences or professional experiences have helped us to build relationships, like deep relationships at the highest levels within media and entertainment, professional sports, Fortune 500, kind of the who's who in startups over the last 20 years. We've worked with them in some capacity, and government, right? And so, we have a number of examples where we've been able to introduce our portfolio companies to their first large customers. And then that large customer actually becomes an acquirer, ultimately acquirer of the company. So those are the ways that we help.
Thank you so much, Marlon. That was amazing. I hope all of you listeners out there learned something from such a seasoned VC. And for those of you that enjoyed this episode and were able to take something from the conversation, please, don't hesitate to share it. If you think there's other people out there that can learn from this helpful information, do so. Sharing is caring, and we want to continue to spread this message and help as many founders as we can. Speaking of helping founders, before we go, I want to invite you to join us in our community. We have a growing community of startup founders, investors, corporate leaders, all giving access to support, expert advice, and resources that you might need to elevate your startup and keep it going forward. So just go over to est.us/join and join our community. As a member of the Startup of the Year community, you'll get access to vertical focused boot camps that we're going to be doing on the regular, monthly office hours. Actually, they're weekly. If you want to join a weekly office hours, you can. Introductions to investors and corporate partners we work with. Curated topics of discussion. We're going to do a number of different kind of sessions. We just did one this week. Access to government contracts for startups. So there's a lot of opportunity to get government contracts, and we've got a pretty good sense of what those are, and we're continuing to share those opportunities with our community. 24/7, we've got an online community that you can engage with other members. We've also got the featured Daily Deal Flow newsletter, which goes out every weekday to a group of investors. So if you're raising capital, that's another opportunity to get in front of investors and get your stuff out there. And get some additional exposure and potentially investment, as well as the opportunity to get potential investment through established ventures as well. So lots of great stuff if you join the community. Love to have you. Just go to est.us/join. All right. Lots of stuff on this episode. Thanks so much for being a part of it and being here with us. And if you have a startup idea or you want to get something going, today is the best day to start up. Not tomorrow, not the next day. Get it going, iterate, continue to move forward, but you got to start by starting. It's not going to start itself. Until next time, I'm Frank Gruber signing off. Thanks again for listening. Remember to subscribe to our show and review it if you can. We really appreciate all the feedback. And everyone out there, stay safe, be well. It's almost summertime. Start enjoying it a little more because it goes by quick. Have a great day, everyone.
Thanks for listening to the Startup of the Year podcast. Be sure to subscribe, and we'll be back with another episode soon.